Fetch.ai, it's a popular one, currently trading at 79 cents. We said the importance of this 80 cents. That was previous resistance, previous resistance. We needed that to hold as support, and we're now pulling back through. So how far can this move go to the downside before it's completely invalidated? We're going to use moving averages, we're going to use indicators, we're going to use price action, then we're going to paint a collective picture to find out what needs to happen next, how you can reduce your risk and increase your reward, and how you can protect yourself along the way. So we've got panic now, guys. We have got blood in the street. And one thing that I need to tell you about retail by pumps, retail by positive news, retail by sentiment. Retail do not buy the red. Retail do not buy dumps. Retail sell on dumps, guys. We're in a little pullback here on Fetch. I'd said this move was an important one, 80 cents. It was a key psychological level. We did need to ideally hold it. 1, 2, 3 reactions from there, and we'll pull him back down. Doesn't mean by the end of the day we're not going to get a positive reaction and a test of this 200 daily moving average at $1.01, or between $1 and $1.01. That's quite a strong possibility. Don't know it's going to happen. You need to prepare for it to happen. However, it's in a pullback. You need to respect how far it could potentially pull back. So what do we use? We use our Fibonacci retracement tool from this swing low all the way to the bottom of the swing low to the swing high. And what I want to do is build in some levels, some key levels. The 38.2% retracement is going to be the first one. And I want you to see how prices react at this level. Support, 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 support. Fell through, resistance, resistance, and then it breaks through. That's going to be a key area. The next thing, that was from the swing all the way to the bottom here. Next thing we're going to do is pull it all the way to the recent swing. And then we're going to add in the 61.8. So the 61.8, guys, exactly the same as the 38.2 from this big swing. Look how price is reacting. Resistance, resistance, resistance. Price has been pulled back in, pulled back in. So you can see these are two areas. We get rid of the fib and we can create a zone. This is going to be a buy zone. So we'll add that in now. The buy zone is sitting 0.69 to 0.74. So if price pulls back to 0.69, 0.74, what does that do to your risk to reward? Taking it here, where is your risk going to be, guys? Where is this move invalidated? It's below the previous high or low. That's 63 cents. So having a stop loss below the previous high or low and then shooting for, as an example, 200 daily moving average at $1, that's a 2.84 risk to reward. That's not bad. However, if you took it now, what would that do to your risk to reward? 1.28. So the further it pulls back to the buy zone, the further it pulls back to the buy zone, and the further it pulls back, the better the reward and the less the risk. Remember, preservation of capital is the key. You look after the risk, the reward will look after itself. So that is the first thing, guys. The next thing is going to be the indicators. We're going to pull them up now. And the aim of the game, remember, we need this to pull back. We need this to pull back as this comes back to support. Once that comes back to support, and this is holding as oversold, guys, you might even break this trend line, the diagonal. That's fine, as long as you're holding the higher low. Don't let that panic you. As long as you're holding the higher low and as long as you're protecting yourself, as long as you know exactly where you're wrong, below the higher low. So as you're coming into oversold and you're holding this as support, that gives the bulls momentum and the turn to accelerate to try and push price and break a new high. That's what we're looking for. Next thing is going to be the RSI. Remember, when you're above 50, there's the 50 level, you're bullish. When you're below 50, you're bearish. We're still bullish. We haven't fell through below 50. So things are looking good, guys. We're in a pullback. People are getting scared. People are panicking on the day. Charts are looking rosy, guys. We're still pulling back into our buy zone. We've still got lots of wiggle room. Like I say, if you reduce the risk, the reward looks after itself. Patience is the key, guys. Wait for support, wait for support. Then you're following the trend, guys, because following the flow of money is the easiest way that you can make capital in crypto. Trying to get reversals, guys. Reversals are the most difficult patterns to predict, guys. Nobody knows when a reversal is going to be in. People can't pick bottoms. People can't pick tops. You just need to look at what the chart gives you and then make sure that you reduce your risk. So if you did enjoy this video, guys, let me know in the comments. Don't forget, join the Discord group, completely free. Lots of great people in there. We've got 200 people in there now. So I'll see you in the Discord group, and bye for now.